Today's episode of Profiles in Risk is sponsored by SaveLaney.com. Our friend Alexander is a claims adjuster, and he uses a service dog for his autism and a couple of other conditions. His service dog, Laney, has been diagnosed with a very, very curable cancer, and we are helping raise funds to save Laney. Learn more at SaveLaney.com. Thank you. The question I have for you: what if your pet was more than a pet? What if your pet was also a key part of the family, which they are? What if they were also a key part of your ability to function successfully at work and at life? That is what a service animal is. And it's not an easy process to replace Laney. If the treatment didn't go well, it's not only the financial cost of replacing her, this is an incredibly emotional, difficult situation for any pet owner. And Laney, as a service animal, is so much more than a pet. Hello and welcome to Profiles in Risk. And this is your host, Tony Cañas, looking like I am in the witness protection program because of lighting issues in my current Airbnb in Buenos Aires that will hopefully get solved later this episode as the sun finishes going down. If not, just know it's me. Or I've finally replaced myself with generative AI. After all, there is enough audio of my voice out there that is definitely doable. Today I have with me Paul Monasterio, CEO and co-founder at Kalepa. Paul, thank you for joining me today. How's it going?
It's going great, Tony. Buenos Aires is a wonderful place. Hope you're enjoying the wine, the steak, the winter, I guess.
There are no words for how much I love it. It is winter, and it's been 65 degrees the last 2 days. The first couple of weeks we were here, it was down to like 45, which 45 with no snow is a winter I can get behind. Most days I basically wore a sweater, and that was it. So yeah, I don't know if I'll ever come back.
Well, good barbecuing yesterday for 4th of July out here stateside, so can't complain on that front.
Good.
Probably not, replacing the Malbecs with some beer, but, can't complain about my, Tuesday.
Okay. And by the way, where are you from originally?
I'm originally actually close to where you are. So I'm South American. I'm further north. So I'm from Venezuela. Grew up there, and then moved to the States. Now probably going on 22 years. Going to be in a month or so. Spent some time on the West Coast, some time on the East Coast, and yeah, it's been a fun ride.
So you're one of the few Venezuelans in the U.S. who did not leave because of the problems. Basically, you like Venezuela was still doing really well when you left.
I wouldn't say really well, but certainly definitely things have shifted. I came to the U.S. like many other folks do for my education. So, and the rest is history.
Awesome.
The U.S. has treated me very well, and I'm happy to now be in the U.S. I'm an American citizen now, so that has been enjoyable. Celebrating yesterday as well, so it's been a good ride.
Awesome. So we always give the guest the chance to get the elevator pitch. What is Kalepa?
I think the easiest way to explain what we do is to say what's the problem we're trying to solve. Right? Kalepa as a company is solely focused on helping underwriters write and bind a more profitable book faster with confidence. Right? And each of those three words mean a lot to us. We obviously know that writing fast is easy. You could go ahead and say yes to everything, and you'll write a very fast-growing, very profitable book. And many horror stories of that, certainly from a lot of insurtechs, unfortunately. Right? The flip side of that, of course, is just say, well, I want to ensure I don't have a single claim, so you say no to everything. And it's going to be very hard to have an insurance company without a single policy in force. So ultimately, what you're trying to do, and what top insurance organizations do, is, well, how do I square that circle, right? How do I actually ensure that I'm writing as quickly as possible, as profitably as possible, and do so with confidence? That's what we think technology can help, and that's what we do as a company. We build software. We have an underwriting workbench, a platform that helps commercial underwriters do precisely that across a number of lines, and obviously different flavor depending on the line, but broadly speaking, that's what we do.
Fantastic. So, I mean, I'm a former underwriter. I'm former small commercial farm at Nationwide Ag, and then I'm former middle market at Liberty. So 3 years total underwriting experience, uh, two at Liberty, one at Nationwide. So this definitely speaks to me. But how does
Yeah.
those
Yeah, 100%. I mean, and then you've been in the trenches, right? You know that the job on underwriter is tough, right? On one hand, I always, when I try to explain to people who come from outside of insurance what an underwriter does, it's kind of interesting because, on one hand, an underwriter needs to have a hat of, very commercially oriented person that's trying to solve a problem for their customer, right? You have an insured, they're looking for coverage, they're looking for help, and you're trying to figure out how to help them or how to help, the brokerage partner that is supporting them, right? And I think that persona of an underwriter, which is trying to figure out how do we get this deal done, how do we actually find a solution, is very sales oriented. And I think good underwriters have that sales orientation. On the other hand, the underwriters also need to understand risk and, how do we build a book that is profitable? How do I price accurately? How do I ensure that the terms in the policy are chosen so as to make it profitable? And in that sense, they're wearing a little bit more of an analytical, mathematical, knowledge actuarial hat, right? And the reason I kind of put those two personas is that when you think of that, right, you're organizing, you're getting married and you're thinking of seating charts. You're thinking, where do I seat people? And if I tell you, well, the salesperson, you need to sit right next to the actuarial person. You think, well, like, what are you going to be talking about during that conversation? And then I tell folks, well, that's what an underwriter does. They have to do both, right? So you have those two minds living in one. And what I find is that technology, and particularly the ability of new platforms to help the underwriter reconcile that, is something that's really new, novel, transformative, and that we do. So how do we do that in practice? Well, there are a couple of things that an underwriter has to do to really succeed at both of those, right? One is that the underwriter needs to do a lot of tasks that are what I would call not focus on underwriting judgment. And ideally, they do those as quickly and as efficiently as possible. Then they need to use the underwriting judgment, the knowledge, the depth of understanding, and they need to apply that in the places where it's most critical to get the best rate, to get the best terms, to ultimately solve the problem. And then simultaneously, they need to be doing this while remaining compliant with guidelines, while abiding by any type of restrictions they may have with reinsurance, etc. Ultimately, growing a portfolio, growing a book in a profitable way. So, Copilot, which is the name of our platform, helps across all of those, right? So, in terms of the efficiency, well, Copilot helps the underwriter look at a submission. As a submission comes in, the first thing is take all that information in that submission, extract it, process it, digitize it in a way that is consumable. And it's consumable by a human, but it's consumable by a machine. There are loss runs, there are geotech reports for a construction submission, there's an accord form, there's a supplemental, there's an application, there's a narrative, there's some other files. Well, how do we turn those into information that can be analyzed? So that part, certainly how you do that doesn't require underwriting judgment, but it requires skill, it requires time, and Copilot accelerates that process in an accurate, efficient way, right? So first thing is that submission document ingestion, the email, read the email. The second component is, well, not all submissions are created equal. And this is critical because the one resource that is non-renewable for the underwriter is time. So the underwriter first, before they have underwritten anything, needs to decide, what do I spend my time on? And there are many competing priorities, right? Many submissions come in, other activities come in. They might be spending the time prospecting, trying to, talk to distribution partners, etc. Well, so how do we decide which submissions to focus on? And that's the second key component of Copilot, which is how do we triage, prioritize, and choose the submissions that are most likely to, one, bind, but not just to buy, but buying while being profitable, while being in appetite, while helping us drive the book in the direction we want to. So, of course, the first component is critical, right? If you don't have the right information from the submission, if you don't have information about these businesses, well, how are you going to select whether you should work on it or not? The second one, of course, is can we look at the appetite? Can we look at what other submissions have bound from this distribution partner in the past? And that's what a lot of the, what I call recommendation systems and a few of these technologies build in to surface information about that submission and piece that together so that it can rank order what to work on in the most effective way, and of course learn from that, right? As an underwriter continues to use that. And the third piece is, well, okay, now they're looking at an individual submission. What do they need to know, right? What are the exposures and controls of this risk? And there, Copilot does two things, right? It takes the information in the submission, but it then goes out into the world and into all the data sources that a carrier might have, right? So it might be looking at the web and social media, news articles. It might look at the government databases. At the federal level, it might look at things like, OSHA. At the state level, it might look at incorporation records, at liquor licenses if you're looking at a restaurant or retail establishment. At the municipal level, it might be looking at building permits. It might be looking at health ratings. And it's ultimately crunching all of that information from the web, images, news, social media, combining that with information we have taken from the submission and surfacing to the underwriter, well, what is it that they need to know? Right? So let's say you're writing, as you were mentioning, back in your Nationwide and Liberty days, you're writing a contractor, for example, and the contractor says, I don't do demolition. Okay, that's maybe one of the questions you have. Well, but maybe you actually, in fact, do not want to write demolition contractors. That's not something that it is in appetite, or even if it is, maybe you have too much exposure to those already, and then you want to basically be retreating from it. Well, Copilot will say, okay, in the submission, we ask them if they do demolition. They say they don't. That's fine. We know that. 2, we know that there's a guideline here, or, we have too much demolition. We know that. 3, but we see 3 building permits from the past 6 weeks that say that this guy demolished 3 buildings, downtown. All right, something doesn't add up there. Let's surface that to the underwriter. Let's say you probably do not want to write this, and this is why. And not only that, you want to reply to the broker and say, hey, I'm finding this, so you either resolve this for me, or 2, or I'll have to decline it, or 3, I have to add an exclusion to this policy that will exclude that specific type of exposure. Tony, I think you're on mute.
Perfect. The 3 pieces of it make perfect sense to me. The going back to my Liberty days, the 120-page accord and supplemental applications, and basically most of the applications that come in, we're not going to end up writing for whatever reason.
Right.
And each of those wastes hours and hours and hours of processing people's time and my UA's time, and eventually some of my own time, right? So yeah, anything that can grab that whole mess and digitize it is by itself incredible. And then, yeah, you get more applications than you have a chance to actually quote on. So being able to prioritize on those based on which ones are likely to be profitable, which ones are likely to win, which ones come from agencies that are really strong relationships that we need to maintain, etc. Being able to very quickly see that, like I had a fantastic UA. Becky had been at Liberty for 30 years and knew the agents and the policy like the back of her hand and the system. So she did this already, but not every underwriter has a Becky, right? And Becky retired, right? Whoever is on my old desk now has a new UA that doesn't have all that knowledge. Anything that we can do to help them is definitely very, very, very helpful. And then the actual rating of the individual submission, back in my day, I feel so old saying that, was multiple systems. There was a liability system, there was a property system, there was like Excel rating sheets for like the umbrella and things like that. It's messy. And then the authority piece. So you haven't mentioned authority, but on the website I noticed that you mentioned the like sticking to authority. My authority at Liberty was a 60 tab Excel file.
Oh yeah.
so easy to accidentally get it wrong and get yourself in trouble. I remember my first review at Liberty, where my manager says you had, I don't know, 92% adherence to authority, and I thought I was in trouble, and he's like, no, average is about 90, and I'm like,
Right. Yeah.
what?
Yeah. 100%. You know, I'm glad you touched on a couple points there, Tony, which I think I'm really passionate about, right? So you start with Becky, you know, and I love that you say that, right? I love that you mentioned Becky and how helpful she was, how knowledgeable she was. She's been doing this for a while, right? And you know, it's funny because now you see all the hype, really. There's no better word around AI, all the generative AI hype and Chat GPT and such, and it is a powerful technology. It is a very powerful technology that can allow knowledge workers of all stripes to do more than they can before. But the one thing that a lot of these technologies are not good at is having judgment, and particularly some of that judgment that, you know, maybe Becky had accrued over 30 years, and you know, now, like, basically everyone and their mother has built a Copilot. You know, we called the product Copilot 5 years ago. And really what we meant by Copilot was, how can everyone have a Becky? And also, how can Becky have a Becky, right? How can Becky have a Becky? Because that's what we really think is the way to turn these powerful technologies of, you know, generative AI, of natural language processing, of OCR, into real results, right? The idea is that the underwriter needs to focus on the parts of the problem where they are uniquely qualified to use their judgment, use their experience, use that sixth sense that the machine doesn't know. But the things that the machine is good at doing, you can let the machine do that in service of those underwriters. And we have thought of that principle from day one, right? It requires a number of things that are important. Right? It cannot be a black box, right? It needs to be transparent. When Copilot makes a recommendation, if it tells you, hey, you know, we think that this is a good opportunity. We think you should add the following exclusion, which you should rate it this way, and we think this is what it might do to the composition of your book, but this is why, right? When we tell you, hey, you know, these guys do appear to be selling more alcohol than they do, because, and how do you know that? Well, you know, here are the sales information, here are the pictures of, you know, the stripper pole in the back of what you thought was a nice restaurant, and the $2 shots with college students. That might not be what you thought it was, and you might want to make a different decision here than you would have made otherwise. Right, so ultimately, Copilot is focused on that, and bringing together that data and then that transparency, which is critical. So the underwriter can understand why are you recommending that, and do that separation, right? You know, basically when he sees, hey, here's our recommendation. We think that you should work on this opportunity. We think that this is good. This broker has bound a lot for you. It is in appetite, looks squeaky clean. It is in target. It will help with the book composition. And they tell us, yeah, but what you don't know here is that that broker has been chopping that around 4 years in a row. He's just blocking the market and has no intention of that. Okay, now we learn that. Next time we try, right? Like Copilot, and that's where the learning that these tools can do, and it's something that they can do now that they couldn't do 2 years ago, 5 years ago, comes into play. Now you say, well, thank you for that feedback. I'm going to be like Becky and, you know, can get there quicker. And then even Becky, right? You basically, what you would love to have had is 10 Beckys, but there are no 10 Beckys there. And as a matter of fact, there are more Beckys retiring than coming into the profession. So how can we get Becky to do the work of 10 Beckys? Well, again, that's where we can put, you know, Copilot to work, right? Because Copilot doesn't, for now at least, doesn't eat, doesn't sleep, and it really is there, and, you know, to support that process every step of the way.
Fantastic. Are there specific lines of business that you guys are ready for today?
Sure.
Or is it most of commercial lines? Can you do small commercial, middle market, and specialty stuff? Like what parts of commercial lines are you already playing in?
Yeah, it's most commercial. So I'll tell you in a couple, vectors, and unsurprising to you probably it is that we are actually expanding across those. But where we are today, the first one is geographically we're focused on the U.S. and most likely our international expansion. We work with some carriers that are foreign but with their U.S. operations. Some of the European, Asian carriers and their U.S. operations. U.S. focus. In terms of lines, most of commercial. So we support across sizes, small, mid-market, large as well, and definitely specialty. So we do quite a bit of specialty. We do casualty, we do property, we do workers' comp, we do management liability. There are a handful of lines that we haven't focused on some parts, right? Copilot, there's elements of Copilot that rely on kind of an in-depth analysis of the risk and the book. For example, cyber has been one that we have not supported so far. But by and large, all other lines are well supported, and we're supporting carriers and program administrators and MGAs across them. So that's been exciting. The mix obviously has changed over the years as we have launched new. For example, we launched management liability and a big adoption of that last year, and then we launched earlier this year, and then fleet last year. So I think we've seen a lot of growth across those, and yeah, I mean it's been exciting. Obviously, we do see that sometimes the growth in some segments is not driven by us; it's driven by where the industry seeing pain points. So during kind of reinsurance renewal cycles at the beginning of the quarters, we tend to see spikes when folks are using Copilot to basically demonstrate quality underwriting to their capacity partners. We're certainly seeing growth in auto just because writing commercial auto is pretty tough right now. So kind of a lot of folks need help. Certainly the specialty market has seen a lot of growth independent of Kalepa, but we have benefited from that because obviously those are lines that people want to have that Copilot to help them get through faster, and where the number of underwriters frankly is not meeting the capacity and the demand. So people want to ensure that each of those underwriters is operating at maximum productivity, but also making the best possible decision they can. Again, I go back to the same thing. You don't want folks to just write more and then be putting dynamite in your book that you're going to be, paying the consequences for after. So it's very important to us that Copilot ensures that you're doing both. You write more efficiently, but you're doing that profitably and with confidence.
What is the integration like?
Sure.
So does it completely replace my underwriting and policy management system? And how does it integrate with my stuff? And how long does it take?
Yeah, it evolves, right? So it evolves over time. One of the things that we're very proud of, and it's something that generally we find critical for the adoption of any technology. I think a lot of the technology adoption curve, right? You see the Gartner hype cycle, and you see, a year ago it was blockchain, and 3 years ago it was big data, and then metaverse, and then now it is AI, right? And it's generative AI. It's hard to separate the wheat from the chaff, and we find that one of the most effective ways of doing that is, the proof is in the pudding, right? So one thing we can do, in many of our clients are actually starting to do that, is you can basically really start with a single submission, right? So can I use Copilot with a single submission and see what do I know now? Can I write this more confidently than before? And what that means is that all that it takes for that to happen is you could forward an email and start using Copilot. So we have some clients that have started using Copilot in an afternoon, right? And they go from one submission to 10 to 50 to 100 to 10,000. Of course, what happens is that's not the end state. The end state is one where they start using Copilot and then integrate at scale. The process for integration is simple. We generally speaking integrate into a policy admin system. And there really are two pieces of integration. The first one is how do the submissions get into Copilot? So some folks that receive most of their submissions via email is as simple as we have a plugin or the forward, and that's it. It's auto forward is set up. Other folks that have a portal, we then integrate into a portal either via their APIs or our APIs. So that tends to be, really a couple man hours of effort. And then downstream, once the underwriter is living in Copilot, but at some point they say, okay, I want to issue this policy, I want to quote. Then we Copilot can push the relevant rating information, to create a quote and ultimately buying a quote, as well as any information for auditing, right? The track record of how was this decision made. We push that via API to a policy admin, and we've integrated to all the major policy admin systems as well as a lot of homegrown solutions. That, generally speaking, can take a little bit longer, and a little longer compared to an afternoon, right? So it's 2-3 weeks when we're doing that integration. Certainly, sometimes some of these multi-year policy admin transformation initiatives kind of get in the way, and then oftentimes we integrate to one system and then integrate to another as they make transition. But it tends to be fairly seamless. And the underwriters, obviously, the experience is one where they're not moving stuff around. They're leaving Copilot, and Copilot is talking to the systems behind the scenes.
Fantastic. That's better than most of what I've heard. What is the pricing like?
The pricing certainly varies with the size of book that folks are writing, right? So some folks are writing a single policy at the time and start paying as they go, right? And that tends to be true of many of our smaller clients, right? So we work with some MGAs, some of the local mutuals that tend to start on a kind of variable, what I'll call per submission pricing. Then you see the folks that then shift to an enterprise license, right? So the enterprise licenses are generally scoped to the size of the book. You can imagine someone who's writing a $200 million book is paying a different price than someone who's writing a $2 billion book. And oftentimes they start with a 200 million and then they add, and they are up at a 2 billion. And then it scales with that, of course, with economies of scale, right? So, maybe a percentage at the lower end, and as a percentage that declines, the larger the relationship gets.
Okay. What kind of results are the clients seeing and telling you that they're seeing? What success stories?
That is my favorite question, right? That is my favorite question because the one thing, I come from the tech world, and one thing I really appreciate of the industry that you and I operate in now is the fact that insurance is very measurable, right? The fact of the matter was that if you look back, before calculators were invented, insurance was probably the only industry that was actually using data, and you can actually evaluate performance not on vanity metrics but on real metrics. Am I writing more? Am I making more money in the bottom line? Simple as that, right? So are we writing more, i.e. am I growing faster? Am I turning around my quotes faster? Am I quoting, binding faster? Part one, top line. Bottom line, what is my combined ratio? So we see impact on both. And the impact that we see on the top line tends to be, generally speaking, we have seen ranging from 25 to, in the highest levels, 60, 70% increases to throughput, to growth. Where does that come from? It comes from three pieces, and you actually touched on a few of them already. The first one is what you said. Well, you have an underwriter. The underwriter has 24 hours in a day. If the underwriter can do more during those 24 hours, they will probably quote more, and they'll probably buy more, right? So all else equal, just saving time for the underwriter leads to more policies back. Part one. Part two is interesting. It's almost a tautology, but it is, well, if the underwriter is working on the opportunities that are more likely to buy, they will also buy more. Right? All else being equal, by triaging and spending more time on what is likely to buy and not on what is not going to buy, they're going to buy more. Right? The combination of those two makes a huge difference. Right? That actually drives throughput very significantly for our carrier and MGA clients. Now, the second part, which is, I would argue for many folks actually more important, is the profitability. Right? So how are you actually driving improvements in loss performance? So the improvements in loss performance, depending on the line, are harder to measure. Right? You can imagine that, well, if I tell you you're writing casualty and the claims take 10 years to take place. So what would be the actual proper way of doing that? Well, I'll tell you, well, Tony, take half of your submissions randomly, run them through Copilot, take the other half, don't run them through Copilot, and let's see what happens in the next 10 years. And then over 10 years, we'll compare one and the others, and then you'll trust me when you'll see that one has fewer losses. That's true, right? That is the way to do this for sure. is to evaluate that. But we have seen actually a number of indicators, even for long tail lines, of that improvements in profitability. We see two common tests. The first one is renewals. Oftentimes our clients basically say, we bound something last year without having Copilot. I have to look at this renewal book anyways right now because it's July 5th, so I'm looking maybe at my October renewals. Well, let me run those to Copilot and see what I find. And like clockwork, we find something similar to what you mentioned on adherence. 10% of stuff is not in appetite. 10% of stuff I will use a different rating. 5% of stuff I will have used actually different policy language that will have actually protected me. And another 10% of stuff I will have declined because, we have been burned on a claim that we could have avoided because that real estate habitational property in the Midwest that now has a claim on our book over the past 12 months for $4 million had 6 shootings the previous year. We just didn't know about them, but Copilot did. So that right there is a big deal for many of our clients. We oftentimes do demos before we're even working with a client. We tell them, send us some submissions. And during the demo, we'll do a demo on your submissions. And I've been in conversations with clients where as we're having a conversation like this, we show them and they pick up the phone and say, we need to get out of this immediately. They're not a client. They just send that as a demo submission and they're on the book. So that's one. The second one that we have seen is kind of for the folks that have kind of more sophisticated piece. You see the curves, right? So even though you don't have the full claim history, you can basically see, well, at the 6-month mark, at the 1-year mark, and sometimes historically, what are we seeing in the book historically, and how does that trend with what the ultimate loss ratio will be? And you do see that shift, right? After you start using Copilot, the quality of the book is improving. You see kind of roughly a risk indicator that is a leading indicator of the ultimate claims. So when we triangulate those, the best we have seen was actually a 15% improvement to loss ratio, which was incredible. That tends to be most common for specialty lines, because in specialty lines, the avoidance of a massive claim can completely change the profitability. When you're doing kind of what I would call the admitted lines and smaller business, you do see kind of the shift in the distribution. It is significant, but it's less radical. You're not going to have like, hey, Copilot help me avoid $50 million in 3 claims, right? It's going to be like, okay, my distribution of claims has shifted to the left.
Fantastic. This is very, very exciting stuff. So we are recording on July 5th. The spring conference calendar is basically over. For any potential prospects that want to meet you guys in person somewhere in the fall, which conferences do you think that you guys are going to, if you know already?
Yeah, no, we tend to go to quite a few. I mean, right now we serve what I would call a wide gamut of different players, right? So we work with carriers, from the large carriers, the top 10 carriers, the nationwides of the world, to reinsurers, to MGAs and program administrators, like Paragon and NEC, to mutuals and regional players that might be large or small. So we tend to be where they are, right? So I was out actually at RIMS a couple of weeks ago. I had a few of my colleagues were up in NAMIC in Quebec City just this past week. We're going to be at target markets. We're definitely going to be at ITC. Obviously, we have folks there really pretty much every time. Well, at the other NAMIC as well, because we have a few of those. And then let's see what else. We're at the Reuters Future of Insurance up in Chicago last week as well. We'll go to, basically capture most of the ones I think I'm going to be at. But yeah, we tend to have folks pretty much at most conferences where carriers, MGAs, or reinsurers are, because those folks are really down the middle for what they're doing. They have underwriters, and if they're underwriting, then we can help.
Fantastic. I'm always curious about the origin story, and both kind of the companies and your own. So looking at your LinkedIn, you've got a bachelor's in mathematics and nuclear engineering from Berkeley. By the way, I used to live in Berkeley. I didn't go to school at Berkeley, but I lived in Berkeley for a little while. Love it. and then you've got a PhD in nuclear science and engineering from MIT. So you've got some real blue chip background. How on earth did you end up in insurance or insurance?
Yeah, it's a great question, right? So it's a funny story, and it ties to two things. So the first one is, as you point out, I come from a science and technology and an AI background. That's what I've been doing for a while. And my first job out of, after I decided to stop being a physicist, my first job was really at a company. It was sort of what I'll call an earlier incarnation of AI, right? The bringing together data, but to the application of helping businesses. And then that company was acquired. It was called APT, Applied Predictive Technologies. It was acquired by MasterCard in 2015. I worked at MasterCard for a little bit. So throughout that experience, I worked with a lot of financial services companies, both in banking and in insurance. So I worked with carriers across the stack, really. I did work with many of the top carriers worldwide on underwriting, on claims, on distribution. And that was frankly fascinating to me. That's really how I became acquainted and fell in love with the industry. My co-founder Danny, actually, he comes from a distinct but somewhat common background these days in insurtech, which is he comes from the Israeli intelligence community. So he comes from a military background.
Very common.
And similarly, kind of data heavy, risk heavy, trying to find real applications of technology. It's not just technology for technology's sake. And then we met at this company, and Danny actually had started our insurance practice at APT from kind of a commercial side. So we had done a lot of work with carriers and learned to appreciate both the people as well as the type of problems. One thing I learned, the more I learned about insurance, the more passionate I became, was one, at the end of the day, insurance is probably the quintessential industry that brings together data and art, right? Folks have been doing actuarial work for 300 years, right? When all the ships were going from Europe to the Americas and elsewhere, and Lloyd's of London started writing. Well, these people actually were writing numbers, which is not something that people were doing back then. But at the end of the day, the industry has evolved to make sure that it blends that with, well, how do we, it's actually done by people, right? People talking to people solving people's problems. I like that. The second one is actually just the impact that insurance has in society, right? For me, insurance is an industry that has a PR problem, particularly within the people, from our generation and younger. And it's really I don't think it's a positive development that it does, because at the end of the day, I see insurance as the engine that enables people to take risk. And if we don't have a mechanism to catch people when they fall, then people try really hard not to fall. And when people try not to fall and not to fail, they don't innovate. They don't try anything new. They don't try anything different. So
Absolutely.
This I actually stole from a friend. This is not mine, but the best description of insurance that I've seen, and it's frankly much more poetic than I am. I'm more on the science side, but we try to keep the art, was insurance is the umbrella that lets you dance under the rain. And I think there's a lot of magic to that, and I think it is true. It is true. If you don't have that umbrella, you will make a different decision. And that's not the decision we want in society. We want the decision where people do dance in the rain because they know someone's out there to take care of them if they get too wet. So ultimately, I think what we're doing is important. I think what we're doing is serving an industry and serving people that need to be served, that need to be helped. So, that really gets us out of bed every morning here at Kalepa, and I'm really excited to be, helping out in whatever way we can.
Fantastic. This has been truly fantastic. When this goes live, I'll tag both you and the company on LinkedIn. This is really, really, really cool. It looks like you've been at this for a few years. Based on your LinkedIn, it looks like almost 6 years running Kalepa.
That's right.
So that makes you a very mature insurtech. So very exciting stuff. Look forward to see you guys on the road and maybe to catch up in a year or two to see what other lines of business you brought in and what other innovation you guys have brought in. Deeply necessary, definitely. As a former underwriter, I wish we had something like this. And I wasn't an underwriter 20 years ago. It was like 6 years ago. So anyway.
Things are moving quickly, but looking forward to that, Tony. And I don't know, who knows? Maybe at that point we'll also be underwriting some businesses in Argentina and I could go pay you a visit there.
Fantastic. Thank you so much for your time today.
Absolutely. Well, thank you for having me, and enjoy. I guess I'm not sure if it's a long vacation or you're fully relocated, but it's a fun place to be in.
Yes, basically.